1.
Here we go!
Welcome into the open where we get technical. You should have investments in long-term growth.
Thank you, Mitch, for the save there. Appreciate that.
Thank you, Mitch.
Oh my God.
Not again.
There we go. Thank you, Mitch.
That was still good. Thank you, Spencer. Thank you, Mitch. Hey guys, welcome to Get Technical. I'm Neal, the super hyped up guy that had a whole bunch of folders instant a little bit earlier. So big shout out to the folks that caught that and found it divisive. That's what I'm here for, to bring drama to the Benzinga live stream. What I want to say, full disclaimer, I'm not a financial advisor. This show is meant for educational and entertainment purposes only, hopefully in equal measure. I do love Spencer Israel deep in my heart. Without him, I don't think I would be doing what I'm doing. In fact, some of the first trades that I found were healthcare stocks that Spencer told me how to watch for trial results as a catalyst. So I don't know, Spencer, if you remember that, but big
I remember that conversation. You were like, how do I read this stuff? I was like, man, I don't know how to read this stuff either. I only look for the same 3 words, right? Met primary endpoint or missed primary endpoint.
That has stuck with me for a long time. When a lot of people get into healthcare stocks, I say exactly what you said, Spencer, which I think is from Dennis. I don't care what the drug is. I don't care what the company is. As long as it met primary endpoint, we've got a bullish catalyst here on the stock. So thank you, Spencer. Much love to you and the Rocky crew. All right, guys, I'm going to share my screen. I got a new pick for you that I want to get into the open here. So let's get this up on the stream. All right, guys, we love that. We love that opening video. All right, guys, good morning. I want to say today I've got a new pick for you, FPRX, about to go over that. We're going to check our watch list from yesterday. I want you guys to let me know if you are in SENS, SENS. I want you to let me know if you're in NNDM, I believe it is, the nano device stock. These are picks from yesterday. And we'll go through the whole watch list, see how it's performing, see how to play it, see if it's confirming the patterns that we drew up yesterday, and whether or not we should be piling in, getting out, raising stop losses, all that fun stuff. First up, I've got a cup and handle for you guys. Cup and handle. Ticker is FPRX. FPRX. Don't know much about the company. It's got therapeutics in the name, so I'm guessing some form of biotech, but that doesn't really matter. I've got some serious bulls coming into the market, driving this thing up like crazy. Could you have predicted this? Maybe, I don't know, saucer, but how could you predict this type of movement? Doesn't matter. Let's look at the here and the now. We've got a nice cup and handle, and what are we doing here? We're looking for a close above this upper resistance line on the cup and handle, which it looks like we might get. We are getting some selling here. The market overall, I believe, is selling a bit, but keep your eye on this stock. FPRX, classic cup and handle, fantastic entry point. Price target, $29. So let's go ahead and do the thing where we calculate the return on that. So at its current price, were you to enter, that would be about a 47% return. Watch this stock. All right, next up, looking at NNDM. If anyone's in NNDM, RG, big shout out to you for being in NNDM since $4.30. This one is a long-term pattern that's been forming. Nano Dimension, I believe that this one is... Yes. All right. So intelligent devices for 3D modeling, for 3D manufacturing. This is a huge space. I mean, this is going to be a theme. So we're going to be talking about 3D printing coming up. Kathy Wood's big on 3D printing with her ETF PRNT. And we're going to be big on the things behind the thing. That is the technology that enables the emerging disruptive sector, which is 3D printing in this case. What enables it? Stuff like nano dimension, NNDM. What else enables it? Stocks you will probably already know, like NVIDIA. If any of you guys know anyone that's in any type of 3D modeling, anything from gaming to architecture, construction, anything that requires any type of CAD drawing, anything that's 3D modeling, that is going to be used to manufacture a part that's going to go into aerospace, go into defense, go into all of these large, big ticket government contracts, manufacturing processes require a lot of graphics power. And right now, NVIDIA is running the game. So at any rate, back to NNDM, which is another thing behind the thing. We've got a nice rounding bottom, which we love here because we love to scoop up the refuse that has been thrown away for big reversal power. All right. So we've got a consolidation at this former resistance line, now support, consolidation. NNDM is now still a good time to enter. Yes. All right. So let's take a look. What I've done here is I've measured the bottom up to the resistance line. You guys already know this. Here we are. We're at about halfway, not even halfway. We're at a little bit less than halfway up through that. So if we're trading from where we are right now, which yes is above resistance, yes, do I think it's safe personally for me to get into this? Yes. My stop is just going to be a little bit below the lowest point on this resistance, probably like 1261, something like that. I would put my stop right here, and then enter the trade right now. This is a perfectly good time for me to enter. And let's look at the profit potential on NNDM from right now, where we take the measured move from the bottom down here and then add it up above the resistance. Looking at 76%. Are we going to run into some resistance? Yes, there are some key points here that may serve as resistance, but the way that I look at those is points of consolidation, opportunities to get in with more capital, to get more out of the trade. Also, opportunities to raise your stop loss, because those will establish new support lines where you'll want to place your stop loss just a little bit below the support. That's how we do it. All right. I'm pumped about this one. EBON International Holdings, ladies and gentlemen. Who got in? Who got into EBON International Holdings? What a beast. Gapping up. Ain't no one stopping it. This one is beautiful. Beautiful, beautiful, beautiful. The gap did get filled, and we've got some new absolute fiery bullish momentum. Bullish momentum on this stock. These are healthy gaps. These are not the type of gaps that I look to get close. These are the type of gaps that we've got rapid accumulation from big money coming into this stock. All right. It's not until we've got a longer period where things start to slow down and we see volume and momentum start to slow down that we start to look at exhaustion gaps as possible places to take target and maybe exit the position. This is something that I look at like, holy smokes, the train is running. Choo choo. Choo choo. All right, so let me know if you got in on this one. Yeah, I want to go through the list. I'm going to take some picks from you guys. Look at what are you looking at the cup and handle? What time frame are your charts set up? Let me go back to that cup and handle. So this is FPRX. This is the daily. This is the daily. So most of the time, the way that I do these, and I think a lot of others, like if you're reading, I believe Technical Analysis of Financial Markets, which is a textbook you should check out. Get it used. It's like $90. Get it used. But if you're reading that, it's a very broad base for technical analysis, and it's really where most of what I'm talking about on Get Technical comes from. Very simple. We're just looking at price. We're not getting too fancy with all the tools that are available today. We're really just looking at price on the chart. That book, Technical Analysis of Financial Markets, will tell you to look at monthly and weekly and then zero in on the daily. That's kind of where that book lives. It references day trading and says you can get deeper with hour and then even minutes and so forth. But that book is really teaching you to look at the long-term trends to get the whole picture of what's going on with these stocks so that you can place a little bit more confidence in what will probably happen next. Because remember, with technical analysis, it's all about using price history. Price history is how we do our best to predict what might happen next. And we just stand on the shoulders of a bunch of great technical analysts who came up with patterns and tools for analyzing what's going on in the markets to increase the probability that our predictions will hold true. So on this stock, let's just go back. I'm on the daily looking at this, but I started off with a month. Jeez Louise, get out of here. And the main thing that I wanted was something that was trending down for a period. I was hoping for a double bottom reversal, but then I noticed this little scoop formation, which you got to look into when you see a scoop. Anytime you see something like that, you might have something good. So yeah, of course my drawings are all effed up, but here, let's just get rid of that. And then I zoomed in on the daily. The daily is the best place for these types of swing trades. I don't want to talk too much about day trading because I like to let my stuff resolve overnight. I don't want the anxiety of having to enter my trades and then exit all of them at the end of the day for fear that something crazy could happen in aftermarket hours or whatever while I'm sleeping. I don't want to live like that. I work full time. I invest to make money, to grow my wealth, to get the most out of my salary, and then I trade to supplement my incomes from that investing. All right. Technical analysis of financial markets. I believe John Murphy is the author. I could be wrong about that. Definitely check it out. Expensive book. Try to get it used. I know that one watcher of the show is able to do that, so it's definitely possible. BNGO. Who's in BNGO? This one, I got in trouble yesterday because I made a false statement. I said that BNGO, Bionano Genomics, was in the ARKG ETF for genomics revolution, for disruptive technology and genomics. I was wrong. I told a little fib. I forgot who it was, but I was called out in chat, promptly corrected. Spencer had my back. He looked it up, confirmed I was wrong. And I'm sorry for that. Got me in a lot of trouble. I actually got I got a DM after that. I got a DM from our new chair. So Benzinga has a board of directors. You guys might not know this. We're a private company, so you might not be able to find this information very easily. We recently brought on a new chair. Some of you guys know this. If you're in chat, let me know if you already know who our new chair is. But she's a real hard ass, and she likes to communicate via DM on TikTok and Instagram and Twitter, and it's like really hard for me to keep up with her. I'm trying to do my best for her, but she sends me DMs for like really critical stuff, and I got a DM on Twitter. Our new chair, Mia Khalifa, actress Mia Khalifa, told me that I was in trouble about that BNGO thing. So we are bringing on a guest today to take over the show. Otherwise, we're going to get taken off the air. So make sure you stick around until 10 a.m. Ricky Gutierrez, day trader, who loves to stick with a set of stocks, unlike me, where I'm kind of all over the place. He loves to stick with a set of stocks that he will regularly trade, is going to talk about his methods for doing that. He's very big on YouTube, which hey, all the power to him. But this guy, he really actually knows what the hell he's doing. The man live trades every single day. So we're going to get some lessons from him on that. So you guys, if you can, tweet at Mia Khalifa and just tell her I'm doing my best. I want it. This is my job on the line, guys. All right. So I really appreciate it. Looking at Oxy. So this is Occidental Petroleum. Oil is not the future. Oil's not the future. I don't believe that it is. All right. But it is in what that textbook I told you about would call like a short-term or intermediate trend. All right. Obviously, it's not a long-term trend because oil is not the future. It's bad for the environment, and we don't want that. The people want electric vehicles. That is the future. But at any rate, a trend's a trend. All right. We've got higher highs, higher lows. This is the same thing I talked about yesterday. We had a remainder of a gap to close. We have closed that. We have closed above it, and we are climbing up toward our price target, which is the resolution of our pattern. So guys, yesterday I took off 50% of my holdings. But if I see momentum coming in, which yesterday the RSI was trending down, if you recall. So this is something you look at. You can draw your lines on your RSI just like you draw on your price, all right, to get an idea of how the momentum is going. What direction is momentum going? But look, we're getting a little bit of a turnaround. This is what I said yesterday, is if we get a turnaround on the RSI, that might be an indication that this trend is going to get the power it needs to reach its destination, which is our sell target all the way up here at $39 on OXY. So if this continues, I'm not saying right now because I'm seeing a red candle. Ideally, to make me feel really good about this, I want to see some green candles. So, you know, hopefully we get that. And if we do, then I'm going to pile back in. Just use whatever I took out for profit, throw it back in there and raise my stop loss at support, which is right about here, right? It's these highs on the green candles. Yeah. So yeah, and I'm not kidding about the Mia Khalifa thing, guys. So if you guys could tweet at her and just say, you know, I'm doing my best out here. I really appreciate it. Okay. Let's look at XOM, another oil stock, ExxonMobil, a well-known name with a gap to close. This one I think is going to be cooking on gas. Look at the volume. We are maintaining super healthy volume. This is the type of level that we want to see in the volume. If you can see this stick, let me go full screen here. This is the type of volume that you want to see for a massive surge. All right. So we're going to watch for this level of volume to happen if we're going to get something big here. But our price target is about 73. That's based on the measured move from this low up to this resistance level. You can see how it's resistance here, and it's right about where it peaked in the middle of that W. So this is a double bottom. We like this. This is what we call, well, not so much of a rat snack, but it does have this nice upward trend, and I do have a high degree of conviction that this will go up. Look at the nice green candle. So XOM. Whoa. Janet said that the January 26th Big Ideas ARK investment thing. Big Ideas is like what ARK calls their when they release information to the public about what they see happening in the future. Big Ideas being sectors and technologies that are going to disrupt the markets that they are interested in getting into. So BNGO might get in there. Brandy, thank you for the forgiveness. And also shout out to Brandy for being the one that pointed out that BNGO wasn't in there. I really need the validation. I'm a real glass cannon, guys. All right, ship, another hot one. Anyone that's been on Twitter in the last 5 minutes knows that ship has been hot. So check out ship. This was a rounding bottom with a nice gap down that got closed. Wish I would have caught it earlier so I could have tried to time that gap fill. Regardless, the timing's still great for a breakout, and we are doing it. Look at the momentum we've got. We're a little bit down today. I think that is parallel with what's happening with most of the market. We will have some picks here today that are diverging from the rest of the market. I think NVIDIA's one. A lot of times when I'm looking at my portfolio over the past week or so, I see that NVIDIA's green when a lot of my more like broader ETFs that are affected by market swings are red. For being like a bit down on the day. So at any rate, price targets for ship remain at 292 and 332. So in that range. So what I would do here as a person who draws on my charts, as a technical analyst, would be something like this. Like, this is what we're watching for, all right? And something really cool that would happen would be if we break through this lower, more conservative price target, and then get a point of consolidation, and we can get a nice sell point much higher. It's a considerable difference. Actually, if I measure this, difference between the two is about 14%. So this is one to watch when we get there. We'll keep it on the watch list. We'll come back to it, watch it together. Yeah, and if you're selling shares on SHIP, go for it. This is a great time, especially if you're in a bit earlier. Now is the time to take that profit. I'm not going to knock you for it. Taking a look at Fubo. We've got another cup and handle with Fubo here. Really, really liking this stock. Really liking FUBO, Fubo TV. I believe it's sports streaming. Focus on offering live television streaming. Yeah, absolutely. Streaming is happening. We're using the internet to deliver television. One thing that's really been lacking, as we know for some time, is the ability to watch sports. So I think this is in a great area fundamentally. The idea is fantastic. And we've got a little bit of a slant here on the top of our cup. But that's a-okay. It's still a cup and handle pattern. What we're looking at for entry is a hopefully green close. So that means if this candle on the daily can close above this resistance on the handle portion of the cup and handle, that's our entry. And then we're looking at conservatively speaking, we go to the low. I'm going to measure up to this resistance line. Conservatively 299%. So who knows how long that will take to resolve, but I mean, it went up. Let's take a little look-see. It went up to the top of this candle, the left side of the cup. It went up 139% in 1, 2, 3, 4, 5 days. So hot, spicy stock. FUBO, Fubo TV. All right, so I've got more on the watch list that I can keep going through. I'm still very bullish on NVIDIA. This is a longer term thing. I would consider this like a 2 to 6 month kind of swing trade. Maybe something I hold longer term. I'm much more interested in holding ETFs longer term. I'm willing to, especially actively managed ETFs, because they're cooking right now. I'm willing to eat the cost. The fee associated with an actively managed ETF. But NVIDIA is looking like a very good swing trade. Like I said, it's green a lot of the days when the market's down. So it's got the buyers believing in it. My headset just died. So anyways, that's NVIDIA. I don't want to get too far into my picks because it takes up so much time. You know, follow me on Twitter at Neal's Tweets. And I'll keep the watch list open. So if you want to follow the Get Technical watch list, they'll all be there for you. There's a lot here. I think we've covered most of them. I mean, Sens is fantastic. Sens is great. So these are our two price targets. This lower one is actually our price target based on the breakout from this $3.97 level, which would have been a great entry point. This is what I'm talking about, a close above resistance. It doesn't have to be a candle that like totally is floating above the line. It's a close. So since it's green, that means the top area of this candle is where it closed for the period. In this case, it's the day. We're on the daily chart. So it closed above this resistance. Very bullish sign if it does that. And then look, it gapped up. And then what a day it had. It hit the price target the following day, sold off. Why? Because wise guys are watching the charts the same way we are. Algorithms are trading these charts the same way we are. So that's to be expected. But look, it's holding above prior resistance. It's holding above the support. So I'm thinking this thing hits our second price target, which is actually a measured move, or that's not the correct absolute term. It's the height of our pole here from this descending triangle plus the breakout brings us to 584. So still potential. So if you're in there, maybe if you haven't sold off to take a little profit, treat yourself, but keep an eye on this one because it still has room to go. All right. Yeah. I want to take picks. We got 5 minutes before my replacement comes on. So, guys, just be cool, make me look good when that happens. But yeah, let's get some picks from chat. PLTR coming up. Yo. So PLTR. Looking at this thing, yeah, this has got the Cobra pattern that we like. Like, I don't know if I've talked about this, but so many stocks have this sweet Cobra pattern, and it's like the difference between an IPO that's going to take a long time to start delivering alpha for folks, from a bullish perspective, versus one that's just going to cook. PLTR, we love it. It's got a lot of community support behind it on forums, on social media. It's got the gov contracts. It's a little bit, I'm not the expert on this, but PLTR, Palantir, there are folks that say that their growth in the government space in terms of contracts might be a little bit shaky under the current administration. I'm just saying that just to say it. I don't know if there's any credence to that, but I've seen that talked about a little bit. So that's a little fundamental background on it. We're seeing a sell-off. We're hitting some type of support here. Let's see where that's coming from. It really just looks like we're hitting support at this breakout point here. But that's on the daily. Let's take a look at the 4-hour. Let's zoom in a little bit on the action. All right, so here's what I got to say about this. When we broke out, we established a trend. We broke it down past our trend. Now it kind of looks like we're in a bit of a downward trend with Palantir. Anyone say different? I mean, I would love to get someone's like really brief technical case for Palantir. Cobra pattern I made up. That's not a real thing. I made it up. Yeah, no, I mean, long term, I believe in this stock. I believe in this stock. But do I don't know. I don't see like a really good entry here. Let me know. If you guys see something I don't, teach me. I'm here to learn just like you guys are. All right. MREO, because you put it 5 times in the chat. Ayo. We're start out trying to look at the long term. See, this is a fairly new stock. We're looking at the monthly right now. All right, we had some huge volume toward the end of 2020. Volume's not really, doesn't really tell you much on the monthly level. It's much more important once you get to anything less than daily, weekly, maybe less than weekly. Okay, this thing is stepping up. Little bit by little bit. We do have a trend. It's not a super fast trend, but we've got one. We have got a trend here. We are looking good on the RSI. Would love to get the case from whoever put this in chat. Would love to get the case, because I'm looking at this right now and I see something very basic. There doesn't necessarily need to be a huge upward trend for us to just have a very basic triangle here. So what I'd be watching for is a close above resistance. And it also just looks like, in general, this is the weekly, just in general, this thing is trading between these 2 points. So if you want to be aggressive, you can trade in between these 2 points. Whoa, Voodoo, MP said the magic words. You said the magic words, my friend. Still on the weekly. Looks like a Cobra. So, okay, not a bottom. Guys, remember, a double bottom, you want to have a downward trend leading into it. All right, so you want it to look like this. Here's the downward trend. Here's that booty. And then there's the upward. And that's what makes those really work out. Yeah, I'm not sure if you can really see the tickers here on the right. But I'll post them on Twitter because it's a lot to go through, and like we're already just about out of time. Ricky's not on yet. I don't see him backstage. So hopefully, I don't know, Mitch, if you can get in touch with Aaron Bry and or Spencer Israel to see if Ricky is ready to go. At any rate, let's zoom in on MP here. Let's give it a chance. I mean, that this pattern is the pattern that you see in a double bottom, and let's go ahead and give it a chance, because this stuff matters. Obviously, look at how perfectly this is formed. Look at that damn thing. Look at that thing. And then look at the symmetry on the support here. This is beautiful. This is beautiful. Please post tickers. All right. I'll post all the tickers. Jeez. Do I have a producer right now? Mitch, are you there? I've been left. I don't know. I think Spencer's pooping. So we can't post them on the show right now because I don't have that ability. But I'll post all of these on Twitter like as soon as I'm done. As soon as I'm done. But just to read them back to you, big pick of the day was FPRX. That's the new one, which is closing above the handle, guys. So watch FPRX. I'm in this, full disclosure. I am in this. Let's go. Let us go. NNDM looking snackalicious. EBAN already broke out like a raging bull. BNGO still has that room to go. And people love this stock, and it's got the Cathie Wood blessing. So that means that a bunch of traders are going to go to it. Even hedge fund managers watch for Cathie Wood stuff. All right. It's not just retail traders like you and me. Even hedge fund managers and people on the trading floor at a hedge fund are watching for Cathie Wood's notes. If she did, which I like, if she mentioned BNGO, that's a big blessing. OXY, this one's been on our watch list for a while. SHIP, fairly new. Hey, Spencer, would you mind posting just a couple of the top, like down to NVIDIA, the tickers that are on here? If you can see them.
You mean like on your screen?
Yeah, like on the bottom left so everyone can see them. All right, so we're seeing I love hearing from chat their perspective on these stocks. So I want to go back to Palantir really quick. And so we're seeing it's in an upward channel starting on 12.2. Yeah. I mean, I completely agree with you. I completely agree. That's where I drew my sort of trend line here previously. What could be said is, I mean, I don't know. You could do this stuff. I'm not great with this, but I'm going to use a Fibonacci channel to kind of link these and then bring this up to our swing high here. Yeah, that's not helpful at all. I'm not going to do that. You'll have to teach me more about that, Patrick. I would love to. I mean, there's no reason why our guests have to be people from Twitter and YouTube and like big traders. I'd love to have you on if you want to talk about PLTR in particular. We can talk it out. But I mean, that said, still looking at this stock from the apex, I mean, it's still got some room to go. All right, guys, it looks like our interim CEO is back to turn things around. I do have Ricky Gutierrez in the waiting room. We got the tickers up, guys. Those are the tickers for the Get Technical watch list. Go ahead and take a look at them. And I'll also post my ETFs on Twitter. It's super basic. I just own the ARK ETFs and like one gaming ETF. And I hold IWM, which is a small cap ETF, which is like I hold that for like I'll have that for the next 10 to 20 years of my life. Okay. Spencer, can you please bring on our illustrious guest for the morning?
Oh, there we go. How you doing?
I'm doing well. We meet again.
Yes. Thank you for having me.
Thank you for agreeing to join us on such short notice.
Of course.
So I was telling the folks watching, I did get another scary TikTok DM from our new chair, Miss Khalifa, President Khalifa.
Gosh.
I don't know why, but she's got my number. She wants me out of Benzinga.
Life must be very hard.
I can't sleep at night. I'm waking up in sweats. I can't go to bed at night without thinking about Mia Khalifa.
Yeah, I think a couple people struggle with that.
I think so too, Ricky.
Yeah.
But here you are. I would love it, Ricky, if you wouldn't mind just telling folks, once again, for the folks that don't know, if you don't already know, tell folks a little bit about your trading style and then pull up your chart.
Yeah, so my name is Ricky. I trade a lot of blue chip stocks, and I trade a pair of 2 ETFs. So I heard you talking about that a little bit earlier. I trade NASDAQ ETFs, so SQQQ and TQQQ, which pretty much just follow the NASDAQ market, which has a big focus on tech. So I focus a lot on blue chip tech stocks, and then I focus on the on that ETF. So I'm trying to see how I can share my screen on this. Let me see. Perfect. All right. I think I got it. And can you see it?
Adding to stream. Spencer, are we fighting for control right now? I think we are. Okay. Whoa.
Yeah.
There we go.
You're looking good?
Yeah.
Okay. So I wanted to, if it's okay with you, Neal, I wanted to like talk, we normally talk about like the past couple of times that I've spoken for Benzinga, it's been more about like, here are the stocks, because the market was so bullish, right? I was up quite a bit, a couple $1,000s on the stocks that I was trading. I think today's a perfect example of, when the market doesn't go according to plan and how to manage it. So, it's so amazing to talk about making a profit and when everything is all green and dandy, but I think it's also super, super important, which is one of the areas that I struggled with the most on how to manage risk, how to manage position size, and when to understand, especially if you're under the PDT rule, how to be able to properly enter a trade in which you can tolerate. So is that okay for me to cover?
Yeah, I think that's perfect, man. Good choice.
Okay. Yeah, so one of the things that I talked about in a video that I uploaded yesterday, and we make these pretty often, so if we go to, I don't think I'll be able to pull it up, but on YouTube yesterday I uploaded, so I was looking at /NQ, right? So if you're on the TD Ameritrade platform, this is one thing that you can pull on up on the 180-day 4-hour time frame. During the pre-market session, we hit highs of 13,900. It's not that the market was going to crash. No one can predict the future, right? But one of the things that you can prepare for is worst case scenario. And it's something that a lot of new traders don't prep for because they're always focused on, I want to make a profit. But there's two sides to every opportunity. And one of the things that I focus on most, especially more now than ever before, is I've taken my losses. I've taken enough losses to understand that when things are too good to be true and when we are at these very overbought levels, that I would rather be prepared than be surprised. And that's exactly what we talked about in yesterday's video. And you can see that this happens very, very often. This is /NQ. And again, it's on the 180-day chart. You can see that every time that it hits these 180-day highs, it pulls on back very close to the SMA line. Its overall highs, it corrects itself in some form of way. This happens over and over again, almost like once a month or once every month and a half. So is it surprising that when it hit 13,900 and we're on this consistent rally for over 20 days that it begins to correct itself? It's like, no, it's like common sense. It's like expected, right? So this is why it surprises me that people don't choose to prepare for it. And something that you might be asking is, how do you prepare for these pullbacks? Well, at the end of the day, you never know when the market's going to pull back. Can the market always continue to uptrend? Yes, big picture it does. But can you prepare for a pullback? So let's say you have $1,000 in your trading account, right? Or in your investing account. If you're fully invested and you buy at these overbought levels at $1,000, do you think you're setting your future self up for success? Or would it make more sense that, hey, I'm in a very bullish stock, it's been performing exceptionally well, but it is overbought. So maybe instead of being invested in with $1,000, this is just an example, maybe go in and sell half of your position. And why would you sell half, right? What's to balance out your position? Just in case it does continue to uptrend, that you can partake and reap the benefit of that bullish momentum. But worst case scenario, right? Preparing for your future self, if it begins to correct itself and at these oversold levels, then you can buy with the additional money that you originally had, but you can buy for a better deal. So if you're so certain that you're investing in quality companies, you should be excited that these begin to correct themselves, because that really just means that you're not only investing in them, but you're investing in them when they're at discounted rates, big picture. So instead of always trying to buy them when everything is super bullish and overbought, also, it's not the worst idea to understand when we're at these overbought levels, how to prepare and balance out your position size. So if it does pull back like we're experiencing today, that you have enough money in the reserves in which that you can utilize to buy at these better deals and ride the recovery. So that's essentially what I talked about in yesterday's video. And I sold the majority of my positions. The only one that I have been holding, and this is one that I talked about, is Tesla. This is one that I have a pretty heavy position on. But other than that, I'm watching stocks like GoPro right now. GoPro is not a stock that if you're not, I would not buy this right now by any means. And the reason I say this, and I'm telling you this as I'm someone that's invested in it, I have a very light position on it. So I have 200 shares and I'm only down $100. But it was very bullish. It hit overall highs of $12.77. It sold off due to earnings, so it's a negative catalyst. And we see this happen time after time where it sells off. It takes time. We don't know how much more it can sell off. But once it begins to indicate signs of an uptrend, just like we've seen here and just like we've seen here, give it time for it to sell off. Wait, set those effective alerts to get that proper confirmation. And one of the stocks that, is still killing it, and we talked about it last time, Neal, is Twitter. We did this with Twitter where, Trump got banned from Twitter. It acted as a negative catalyst. We waited for the reversal. I bought, it approached resistance level. I sold, but guess what? It exceeded expectation. It killed it during earnings, and it's been nonstop bullish. But then asking the question, is Twitter a really good deal right now? So for all those that are invested in Twitter, I wish you guys nothing but the best. But would it surprise you if it begins to correct itself in some form of way? Well, no, it wouldn't really surprise you, right? Especially if you're more of a swing trader and a proactive swing trader, would it make sense to, if you have 1,000 shares and you could only buy 1,000 shares, that you maybe reduce your position size just in case it pulls on back, that you can at least buy at a better deal versus what's one of the worst feelings when you're fully invested up here, it sells off, you have no buying power, and then you have to wait and hope it comes back. And I think hope is a very closed-minded way to approach the market. So again, I would rather prepare than to be surprised. So that's essentially all we've been doing lately.
So you mentioned, I think it was 188-day highs.
Yeah.
How are you? So you're using TD Ameritrade.
Yep.
How are you keeping track of that with us? I know they're called studies in TDA.
Yep.
How are you keeping track of that with a study?
So,
or not with a study. How do you keep track of it?
So what I normally focus on, if I'm going into a position longer than just one day, I will look at the 20-day 1 hour and the 180-day 4 hour time frame. I will also look at the 1 year time frame if I really plan to hold for a long period of time, just to have a little bit of a better understanding. My main intention is to understand its overall direction. If I see something that's continuously bearish on the larger time frames, that's probably not something that I want to hold. But if I see something like Twitter, where it's been progressively increasing in value, I look at the 1 year chart very quickly just to see its overall direction. I look at the 180-day, which in my opinion, it's preference. It's a time frame that I tend to refer back to quite often because it lets me see, quite a bit of months, but not so much where maybe a year ago we're in a completely different position than where we were maybe for the past 6 months. So that's essentially it's just more for relevance.
Got it. Okay, so you're just expanding your chart so that you're looking at a 6 month period and a 1 year period, so you can get context on what's happening. Yeah,
it's just to have a little bit more context of its overall direction. It's very hard, especially if I plan to hold something for a couple of weeks or a couple of months, for me to only perform a 5-day analysis, I don't think would be the most effective, right? Because that's just in reference of the past 5 days, that in reference of, if I plan to hold for a longer period of time, I need to understand where we sit within those levels. Yeah. So no Google, what you have a crazy name in chat, but yeah, it's 1 year and 180 day.
Okay, yeah, so that's great. I was touching on that a little bit earlier. I'm trying to discipline myself to do what you're explaining, which is zoom out and get the greater context of what's happening.
Yeah, I heard you talk about one of the ETFs, right, that you had in your watch list and that you plan to hold for 20 years, right? And we'll just imagine we've seen it a lot especially very often. What's that very popular stock right now? It's CCIV.
Yep.
Where it's performing exceptionally well for the past, maybe 1 or 2 months. And if I were to just perform a 30-day, 5-minute analysis, then yeah, this looks amazing, right? But big picture, right? So if you're like, okay, well, I want to invest in this for the next 20 years because of this time frame, but I didn't give myself the opportunity to really take a step back and see that it was actually just recently that it's been experiencing this hype, this pump, this momentum, and this might not be something that, I feel as comfortable to hold, because it almost looks like, well, if I'm
It's
not
a SPAC, I believe.
Yeah,
It's a SPAC that converted.
Has it actually?
I don't know if it has converted. Spencer, can you jump in?
No, it has not converted. That's kind of the catch. That's the point.
It's like
They don't even have a deal
right?
yet. They don't even have a deal.
Yeah, that's the part that, like, I just know that there's a lot of hype behind it. So I don't personally trade stocks like this, but obviously people make a killing off of it. But also, just as much as you can make, you can lose. I know this is a merger for, what is it, Lucid, or what's the company called?
Yep, Lucid Motors. It's one of the bigger Tesla competitors.
Okay, yeah. So it's very similar to the kind of like the Nikola approach, right? Where they don't IPO, they work with a company that's already trading, and they just merge with it, and then they change their ticker.
Mm-hmm.
Okay, so yeah, I think it's pretty interesting. But I do have to say, for myself, especially for like the blue chip stocks and understanding more of like the big picture, looking at the larger timeframes have been of value. Just so I understand when things are at overbought or oversold levels.
So that's really good. Word of caution on a day like this. So do you have like any tips for folks that are more diverse in their stock picks, for ways that they can sort of set trailing points to perhaps take profit, sell off, and then reevaluate? Are there any things to watch for that applies beyond sort of your universe of stocks?
One of the main, and we were actually just talking about this during our live trading session this morning, and one of our members asked, like, Ricky, how do you deal with FOMO? And I think it's the same way that I deal with not buying in early. I think the biggest way to deal with anything in this market is to make sense of it. And as long as it makes sense to you, it doesn't mean that you're going to have to make the most money or the least amount of money with that approach. It literally has to make sense to you so you can at least learn from your mistakes. And the idea of understanding where, let's say for KR, right, Kroger, just recently sold off. It's finding a support level here. Let's say I decide to buy here because I see the potential for it to hit highs of $40. Knowing my track record, I tend to sell very early. I'm okay with, I will sell when I'm up 10%, because based off of previous resistance levels, this is a big enough resistance where I wouldn't mind taking profits. And at the end of the day, one of the things that I really just try to focus on is I would rather be someone that's consistently green versus someone that plans to hold beyond, what is already expected, and then they go from green to red. And it comes down to like asking yourself, what position have you put yourself more in? Are you someone that tends to hold too long, and instead of locking in profits, you go from green to red, which is, I think, one of the worst feelings. And yeah, although selling early is not a glorified approach, it's at least a step in the right direction. And you can always adjust that as you're getting better at locking in profits. So my biggest focus every single time is if I experience or if I see a resistance level, and again, Twitter's, I guess this was a bad example because it 100% exceeded my expectations, where I decided to sell at these levels, but it went beyond that. But at the end of the day, I did something that made sense to me, and I could have always gotten back in, right? And that's the thing that you need to remind yourself is like, yeah, it does suck when you sell too early, but if you're really so certain that it goes beyond what it is that you anticipated, then at least approaching it with a maybe smaller position size and allowing it to ride up and then locking in profits then. But my biggest focus has always been, I don't focus too much on, and that's just, again, we all have different approaches, right? I don't focus too much myself on like trailing stop losses or anything like that. I just look at previous levels or at any indication of a resistance. I might have a goal, right? I might have a goal of selling at 55 as this thing sold off because of previous resistance levels that we had here and that we had here. So it makes sense that we could experience a resistance level at 55. But if I experience a resistance level at 51, my job is to lock in profits. My job is to stay green, right? And if I sell too early there, it pulls back and it continues to uptrend, then guess what? Yeah, it sucks. I left some money on the table, but I can always get back in, and at least I still did something that majority of people can't do. And I think that's when you understand kind of the big picture is, trust me, it sucks. I get it. When you have FOMO and when you miss out on a couple of trades. But if you ask yourself, more often than not, people tend to not miss out on opportunity more than they choose to partake in it. But most likely, at least in my experience, people tend to buy too early than actually, buying when it actually makes sense. And I think, and Neal, you can speak on that, where I just feel like people always try to think about like, well, what if I miss out, or what if it continues to go up? More often than not, it doesn't. And I think that's what you need to understand. It is in your best interest to lock in profits and then to reevaluate it when you're not so emotional if you want to decide to get back in.
Yeah, that's something that especially with recent events with like hyper pump stocks coming from Reddit, as well as like Dogecoin too. It's the FOMO is just so thick in the air. And you're almost always doomed if you're getting it from all of these channels like social media and stuff like that. It's a very good likelihood that you're going to end up holding the bag. So I've even like I get texts from people all the time about how much a certain stock is up, saying like are you in? Are you in? Are you in? And I actually have to ask them like, hey man, stop. Like, I'm really glad that you're in it, but this doesn't fit in my system right now, and you're giving me a lot of FOMO right now, and it's throwing me off my game. So please, like, I'm happy for you. Just stop. So I think Ricky, maybe, and correct me if I'm misinterpreting, but I think maybe another just sort of key takeaway here is have a system and stick to it, and don't let distractions mess with your money. I mean, at the end of the day, this is your money in these markets.
Exactly. And I think a great way to put it is, I don't know how many people watching this video right now started just recently, but let's be honest, we've gained so much traction on just like the social aspect for, the stock market because of like these GameStop and these AMC stocks. And a very simple question that you can ask yourself is the idea of FOMO. There are more people that didn't sell their position on AMC and GME and all these other hype stocks, even when they were up 5 or 10% and ended up going in the red. There are more people that lost money, I can almost reassure you, than actually made money. This happens all the time, all the time. And it's like, well, I could have made 100%. Dude, if you would have made 10%, you would have been better off than the majority of these people. So it is so mind-boggling when people try to persuade one another on like the diamond hands and like hold the line. At the end of the day, when it comes down to trading, when it comes down to the market, you are in the market to make money. And when it goes beyond that, that's when emotions become part of the play, and that's when people really begin to dig themselves in a hole. So it's not just thinking about how much more money I can make, but also always taking into consideration that there's two sides to every opportunity, and just as much money as you can make, you can lose that exact dollar amount, if not more. So every time that you hesitate to lock in profits or to cut losses, just know that it can always be worse.
Clip it and ship it, guys. That's a great quotable piece from you, Ricky. Thank you for your insights on the stocks that you're actually trading, as well as those stocks outside your universe, because those are words to absolutely live by, especially in this crazy market of spikes and divorced valuations. So Ricky, we're at our time. Where can folks get more from you? Where can they keep learning? Where can they follow your trades?
Yeah, and well, if they have any questions, well, one of the biggest things is, especially for a lot of beginners, they might have individual questions that they want to ask me. I respond to all my direct messages on Instagram. I only have one Instagram account. There's a bunch of like fake ones and stuff like that. So just know that I have 182 or 183,000 followers. It's Ricky Gutierrez with 2 Z's. I would encourage you, and again, I respond to all my direct messages. So if you're watching this and you actually have a specific question that you can't Google or you can't YouTube search, I would love to answer it for you or try to assist you in any way that I can. So I think that would be the best way for us to connect. If you message me or comment on my YouTube videos, we get so many comments, I unfortunately don't get to see them all.
Mm-hmm. All right. Well, Ricky, there you go. Thank you so much. Thank you for joining us on short notice. I think Benzinga is in good hands every time you join us.
Thank you, man. Well, I appreciate you guys having me. I hope you have a good rest of your week.
You too, man. Have a good rest of your week. All right, guys. That was Ricky Gutierrez. You know, he's a real one. That's good. That's some great advice. I think you know. Can I get an amen in the chat if you have either been DM'd by one of your college buddies or one of your knucklehead friends from high school, or you've seen it on social, something about a ticker doing something crazy, and you wanted to get in? Let me get an amen if you did it and you lost money. All right. Can I get an amen if the FOMO left you holding the bag at any point in your life? It's happened to all of us. It still happens to me. I'm still trying to get better and better at it every day. But that's what we're here to do. Jason Raznick is once again our CEO after that interim period with Ricky Gutierrez, is asking, can I play the guitar? Not sure why he's asking that. What is it? What do I got, like a guitar hanging over my head? Why are people constantly asking me about guitars? Weird. You know what else is weird? Only 30% of the people watching this show right now are subscribed. Let's do something about that. Like and subscribe today for more programs like Get Technical, ZingerNation PowerHour, Benzinga Happy Hour, Benzinga Pro Happy Hour with Ryan Faluna. Give us a like and a subscribe. All right, guys. Here's what I'll tell you. Maybe someday I will shred the guitar. I would love to perhaps record some different jingles for the show. But we've got so many stock picks, it's hard to get through to it. You know, we're here to make money, not listen to me play Smoke on the Water over and over. All right, so we've got 3 minutes. What I want to leave you with is a couple things. One, don't let FOMO get you into trades. Look for setups that are about to do something that makes sense. Word of the day that I haven't talked about yet, confluence. Confluence. What does that mean? We want to look for a bunch of indicators all saying the same thing. An example of something that is not confluence is a cup and handle pattern that looks like it's about to break out, but volume is on a downward trend. So the stock, it should be going like this, but volume be doing this. That is a discordance. So confluence is when your volume is confirming your price action. Another example is when fundamentals are in confluence with what you see on your price chart. So that's why we are bringing fundamentals, into our technical analysis. I know it's a weird era we live in. Don't tell the author of technical analysis of financial markets that I said that. I don't think he would be pleased, because the whole idea of technical analysis is that price action discounts everything else. So guys, the buy trigger for FPRX, let me just pull up my screen if I'm not sharing it anymore. It's a close above the handle resistance. So we want to see a nice green candle above that resistance line on the handle portion that we're currently in, that we're trading in that downward channel. So that is the trigger. We also want to see, if we see a close above that resistance, we want to see a surge in volume. Confluence. The volume is confirming that the bulls are about to drive this puppy up to our sell target. Also, stop losses when we're talking about that cup and handle. Keep the stop losses on cup and handles at the lowest point of the handle. So once you got that handle kind of going down and then it curves up to make the rest of that little formation, your stop is right about here. and then you want to break out above this point, and that's what makes it start to look sort of like a full handle. All right, guys. I'm Neal Hamilton. This has been Get Technical. Make sure you like and subscribe. Follow me on Twitter at Neal's Tweets for the tickers. I'm going to drop those right now. Next up, I've got Ryan Faluna, the sage-like investor, the Benzinga Pro expert. I've got Jonathan Mallard, the towering behemoth of Benzinga Pro driven trades. They are about to turn the boys into men and everyone else into great traders. All right. So make sure you stay tuned. We've got some great stuff with Benzinga Pro with two of my great friends and colleagues. Thanks for sticking with me. It's been real. I'll see you tomorrow morning at 9:30 a.m. Thanks, guys.